Very, very good morning, everyone. How are you all? Super. Last class we started India's 2. We completed India's 10. Any doubt in India's 37 and India's 10? Any doubt? Till now not done, na? Till now not started? Very good. Excellent. I know this will happen. I will say every day, but you will not start. And the time will come that entire FR syllabus will be completed. And lot of chapters will be pending from your side. This will happen. This is not only for you, this is for every student. 90% or more than 90% student are like this only, who will not do the balance question with me. Okay, you need to understand that if you will not do, then what will happen at the end, you will only find difficulty. And if you'll do all the question, I just say that only you need to read question, read solution. Right now if you don't have time, don't practice, don't do by your own, but you can read question, read solution now. If you are reading solution, then you are able to identify that yes, you have understood or not. That is the only objective. Objective is not right now practice. Practice you do after some time. Okay, but if you are reading, then you will be able to understand, or you can relate with the concept. Yes, this concept was done and this can be the possible answer for that, and then read the solution. It will not take more than 1 hour to read the entire questions, and you can do that entire thing in your office also. You can carry your book whenever the time is there, you can read it. Okay, now coming to India's 2, we have done the meaning done. Inventories are the assets which are held for sale in the ordinary course of business, which are held in the process of production, and which are held in the form of material or supplies to be consumed in the process of production or for rendering of services. Then we have done the valuation part, that it will be lower of cost and NRV whichever is lower. Of course, cost price we have understood that it include three component: cost of purchase, cost of conversion, and other cost. Cost of purchase means invoice price minus trade discount or rebate plus non-refundable duties and taxes plus any directly attributable expenses to bring the inventory in the present location. Then we'll add cost of conversion for manufacturing organization. It will include direct labor and production overhead. Production overhead, variable overhead, and fixed overhead. Variable overhead will be allocated to each unit on the basis of actual production. Fixed overhead on the basis of normal production or actual production, whichever is higher. Other cost, any expenses to bring the inventory in the condition of sale will be also added. What need to be excluded? Admin expense, selling and distribution expense, abnormal loss, storage cost, borrowing cost, subject to Ind AS 23. Correct? There is one very simple question asked in exam. Means I just want to do that this type of question also they ask in exam. Okay. So you will be able to understand that yes, from this chapter also they are asking the question. Means it does not mean that from this question they will not ask the question. You can see RTP, MTP, RTP one time, then MTP two times, then exam for 5 marks. And the same question is given where? In IBS. Acha, I have not informed that this time in the question paper, I have also included all the question of IBS. IBS means your paper number 6, Integrated Business Solution. All the question related to FR I have incorporated. I think I have not informed you na. Chalo, theek hai. Now I am informing that all the questions of IBS, not MCQs. MCQs will be given as a separate PDF. MCQs also have given as a separate PDF, and all the questions of IBS which are similar have been given like this, and which are different have been incorporated. For example, you can see there was one different question in India 2 in IBS, that also have incorporated. You can see IBS. This was not a question which was given in FR. Matlab, it is also very simple, but I have given that. Means from your point of view, all the research I have done. So we are also preparing for IBS. I am also preparing for I am also making you how to prepare for IBS related to FR. Related to FR. Correct? More guidance about IBS I'll give in the balance classes. Dhire dhire I'll also inform you how to prepare about IBS. Not right now, this is very initial stage. I will not say anything about IBS, but yes, I'll also give you that particular suggestion also, and without any fees. No extra fees for that. Good na? I am as a very good. What was the question number? Yeah, just read it. Just let us understand this type of simple question means they are asking at CA final level. At CA final level, what you demand more from ICI? 5 marks question, na? 5 marks question. Let us read. A Limited began operation in the year 2001 2002. In the year 2001 2002, they incurred the following expenditure. Purchase price. Will you add? Purchase price of raw material, import duty and other non-refundable. Add. Add. Refundable purchase tax. Not add, na? Don't add. Freight cost for bringing the goods from the supplier to the factory. Whether it will be added. Cost of unloading. Yes. Packaging. Yes. On 31st March 2002, A Limited received 530 volume rebate from a supplier for purchasing more than 15,000. Whether the rebate will be deducted. Yes. Why not? Achha, one point. What is the difference between trade discount and rebate? Trade discount and rebate both are given on purchase, means on trade date. On trade date. But trade discount is given to all customer. Rebate is given to some special customer on fulfilling some terms and conditions. That is the difference. But both are given on the trade date. Correct? What is the difference between trade discount and cash discount? Cash discount is given on settlement. On settlement means that is not known on the date of purchase, and therefore cash discount or settlement discount will not be deducted while calculating cost of purchase. So any cash discount or any settlement discount will never be deducted from purchase price to calculate cost of purchase. Got this point? A Limited incurred the following additional costs: salary of machine worker in the factory, whether it will be added. Salary of factory supervisor, depreciation of factory building and equipment, consumable used, depreciation of vehicle used to transfer the goods from storeroom for raw material to the machine floor. From storeroom for the raw material. Yes, it will be also included factory electricity, factory rental, depreciation of the entity vehicle used for factory supervisor. Why not? It is depreciation of the entity's vehicle used by the factory supervisor. Factory supervisor na will be added. Why it will not be added? Why? Factory supervisor na. It is indirect cost. It is indirect cost na. During 2001 2002, A Limited incurred the following admin expense. Admin expense will not be added, but if there are some admin expense which can be attributable directly, that can be allocated. That can be allocated. Let us read. Depreciation, of course, not initially not. Depreciation and maintenance of vehicle initially not. Theory of admin per se initially not. But if there is some special point given, then we can add. Of the admin expense, 20% is attributable to administrate the factory. It means the total cost into 20%. So of this total 20% will be added. 20% will be added. In 2001 2002. Achha, I started reading wrong question. Chalo, theek hai. This also we have understood na. Incur the following selling expense. Selling expense will not be added. Selling expense will never be added. So this was a very good question which is asked in RTP, till now not asked in exam. Actually, I was supposed to read some other question. I started reading some other question. Chalo, theek hai. But this question I was supposed to do at the end. But initially also you can do it. Means you can see we have not yet completed the entire chapter. Then also one good question. This is a very good question till now not asked in exam. Correct? Past in this, what was the good point? Past journal entry they have given. Past journal entry. So I will explain what will be journal entry. But first, have you understood what to be added, what not to be added? Let's see whether we have done correct or not. Computation of cost of purchase. So you can see all things we have added. Cost of purchase you can see. Then computation of cost of conversion, direct labor, fixed production overhead. You can see everything has been added. Depreciation of vehicle used by factory supervisor will be also added. Factory supervisor is nothing but indirect na. That become indirect cost. The factory supervisor will come in production overhead. So that will be a part of cost of conversion. That will be part of cost of conversion. So you can see other costs administrating the factory, 20% also added. And there was some consumable stores. Consumable stores means indirect material will be also added, and you can see this become cost of conversion. So if suppose they ask you to calculate cost of purchase and cost of conversion separately, then there is a high chances you will do mistake. Suppose they ask you to calculate cost of purchase and cost of conversion separately, then this become very good question. Or it is quite possible in MCQs they may say calculate cost of purchase only. So in that case, most of the student will do wrong. So what will come in cost of purchase? That is only related to raw material. Whatever you have purchased. So you can see only the cost of purchase were related to what? Raw material. After that, whatever cost incurred, that become a part of cost of conversion. In cost of conversion, only be careful. Only the direct labor will be the manufacturing wages. Apart from that, everything will be production overhead. So if suppose they ask you what is the production overhead, so apart from direct labor, all become what? Production overhead. That only we have done. You can see the answer has been given as per my format. Answer has been given as per my format. Till now, this type of question has not been asked. Suppose they ask you to calculate cost of purchase and cost of conversion separately. Most of the students will do wrong who do only the component separately, means who don't do in the as per Ind AS 2. Are you getting? Means the my format has been given as per what? Ind AS 2 requirement. But to simplify, more many faculties will not do in this way. They will say this will be added, this will be added, this will be added, this will be added, but they will not give the format as per Ind AS 2. So I have given the format as per Ind AS 2. To simplify, can I say I can also make it, but at CA final level, why to simplify? CA inter level, chalo theek hai, we can simplify, but at CA final level, we should not simplify. You should know there are three components as per Ind AS 2. That you should know. That you should know. So from my point of view, this question is very beautiful question. If they ask cost of purchase and cost of conversion separately, correct? This much, any doubt? Now in this question they have also asked journal entry. Journal entry for the first time they are asking for inventory chapter. So journal entry means what? Whatever cash payment, inventory account debit to bank, and whatever there is no cash payment means suppose related to depreciation. So what will be journal entry? Inventory will increase or asset will PP will decrease. So your journal entry should be inventory account debit to PP, or you can say you can write down in this way depreciation. First depreciation calculate karo, depreciation to PP, then inventory to PP, inventory to depreciation, sorry, but they have done one journal entry only, inventory account debit to PP. Chalega. Let's see the journal entry. Journal entry is very simple. You can see for entire cost of purchase they have done one journal entry, inventory account debit to cash and bank. They have first calculated cost of purchase, inventory account debit to cash or bank. Then for the production overhead and direct labor, inventory account debit to cash and bank. And you can see for depreciation what they have written 2PP, 2PP, etc. Understood? And whatever is not depreciation that we paid, that is cash and bank, you can understand by your own. But can you see this question is coming in exam, and if you have not read it just before exam, there is a high chances you can do mistake in journal entries. There is one more point for variable overhead consumables. What can be the journal entries? Consumable means indirect material. So first you will purchase, that will be also debited to inventory only. So one inventory will increase, another inventory will decrease. So inventory of material will decrease and inventory of finished goods will increase. So you can see they have given this journal entry. Inventory of finished goods increase and inventory of consumable store decrease. Good question. Okay. So this also you have understood, and you can see I have given in third category. It means must do before exam. One more question. That question actually simple question I was supposed to take. चलो ठीक है हो गया चलेगा ना. What was the question number? This question. This question was asked in exam. Similar question, but simple question. What they have given? On 1st Jan 2001, an entity accepted an order of 7,000 custom-made corporate gift. On 3rd January 2001, the entity purchased raw material to be consumed in the production process for rupees 5,50,000. Will it be added? Bold the yes or no? Including 50,000 refundable purchase tax, what will do? No, no, including. Not added, mat bolo. Deducted. Including na. So minus what? 50,000. The purchase price was funded by raising loan of 5,55,000, including 5,000 loan raising fee. Now, what do you mean by loan raising fee? It is nothing but transaction cost. What will be the accounting treatment of transaction cost when you avail some loan will be explained you in Ind AS 32 and Ind AS 109 chapter. So just write down refer Ind AS 109. However, this transaction cost will be automatically a part of borrowing cost. How it will become a part of borrowing cost, that I will explain you in chapter in AS 109. Now for inventory, if the question is silent, nothing has been given, we will assume inventory as a qualifying asset or not a qualifying asset. Always assume not a qualifying asset. Not a qualifying asset. Correct? Always assume. For inventory, if nothing has been given, so always assume it is not a qualifying asset and do not add interest, do not add borrowing cost. Correct? So can you see, if the loan raising fee will be part of borrowing cost, it will not be added to the cost price of inventory. This point you have understood. So already I have given refer Ind AS 109. So when we will do Ind AS 109, automatically you will understand the accounting treatment for transaction cost. The loan is secured by the inventory. During Jan 2001, the entity designed the corporate gift for the customer. Design cost include. Design cost will be added. Cost of external designer labor will be added. During Feb 2001, the entity's production team developed the manufacturing technique and made further modification of this. Modification cost. So this will be also added. Material net of 3000 recovered from sale of scrapped output 21,000. So of course 21,000 is net only. So we'll add how much? 21,000 or 21,000 minus 3,000? We'll add 21,000 or 21,000 minus 3,000. Means we need to add 21,000. So we'll do 21,000 कि 21,000 minus 3,000. 21,000 ना? अरे बोल दे या सुनो. देखो just try it. This is a very simple point. In exam hall it is difficult. वही तो net of. यही तो देखो. You are saying minus 3,000 ना? इसलिए तो बोल रहा हूँ that only you are not able to understand English. I am also saying that net of 3,000 recovered from sale of scrapped out. Material is net of 3,000. Means 21,000 is the net amount, not the gross amount. Gross amount is 21 plus 3. I am also saying the same thing. The same question in exam hall is difficult. The same question in exam hall is difficult. Means if you have now doubt, you have the doubt now. So what you should do as a student, give star mark. Just before exam, you should read this only. And if he has doubt, it means everyone has doubt. Everyone write down star mark. Everyone write down yes. Normally we think that we are super, we are expert, we are Paramatma, but we are not that. We are CA student. We need to identify where we can do mistake, and just before exam we should read that only. Understood? Correct. So this all will be added. During Feb, the entity incurred the following additional cost in manufacturing the consumable corporate gift. Consumable stores will be added. Labor will be added. Depreciation of plant means everything will be added. The customized corporate gift were ready for sale on 1st March 2001. It is ready for sale. No abnormal wastage. Thank you very much. Compute the cost of inventory. Substantiate your answer with appropriate reason. So when this question came, most of the student has not given reason. Will you get marks? Half marks. You will get but half marks. Suppose this question was 5 marks, you will get 2 or 2.5. Not more than that. Can I say reason? Can I say for cost of purchase, direct material? For other costs, directly attributable expenses. Only write on that only. You are not supposed to write one paragraph for that. Correct? Now, reason you can see cost of purchase, purchase price. Cost of means whatever is given. Cost of conversion, direct cost, labor. Means you these are the component. You can see they have given a component and why it has been added. They have given. Can you say once you have read this question, it is very easy. But you only say if suppose you have done one mistake. This mistake you have done. Suppose you have deducted minus 3,000. Or one mistake which I know most of the students have done about this 5,000. 5,000 loan raising fee, they will add that also. It is quite possible. Quite possible. They can add loan raising fee also. If you have done that mistake, so in this type of question, how they will check? They will not check like this. Instead, will means the examiner or checker will check this whether this amount is correct or not. If this amount is wrong, they will say 0 marks. Step marking does not mean कि they will give अच्छा This one, this what? Half marks, half marks, half marks. No, 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 no. If your entire totaling mistake, 0 marks. So one mistake means 0 marks. Don't expect that you have written this. Are you expecting that marks? If you are writing 5 lakh, they will give you some marks for that. Don't expect. If this is one calculation, for one calculation they will check this, and this is what? 0. And in exam normally it happens that you have done one mistake, you think that you have not done that mistake, even though simple question, you think that very simple question, but you do this type of mistake or totaling mistake you can do. 5 marks will become 0 marks. So once again, question paper will be always easy. How you are reacting in exam hall, that is important. That is important. What do you think? This question was complicated? What do you think? This question was complicated? It was not at all complicated. But then also from my point of view, most of the students have done some mistake. And whenever simple question, there is high chances that you will mistake. Okay, sir. Done. So this type of question can be asked once again. In CA final level, these three component is important. What will come in cost of purchase? What will come in cost of conversion? What will come in other cost? Have you understood? Yes, sir. This must we have done in the last class only. Special cases also we have done. Two special cases we have done. Achha, one special case we have done about joint product and byproduct. Any doubt in joint product and byproduct? No doubt. Now come to one special point about deferred settlement terms. For this, AS2 was silent. AS2 was silent. Deferred settlement term means if you have purchased some raw material or if you have purchased some stock in trade, either you will purchase raw material or you will purchase stock in trade at some deferred settlement terms, means at deferred payment basis, means on credit basis. On credit basis. Let me explain. Let me explain. Suppose you purchase raw material or whatever stock in trade in cash, and if you purchase in cash you will pay rupees 10,000. Or you purchase in credit. Now when you purchase in credit, there are 2 points. Either you purchase at normal credit, at normal credit terms. Understood? Normal credit terms means what? Normal credit terms means what? Suppose that industry or that particular business provide 30 days credit. So 30 days will be normal credit terms. Correct? It can be 15 days, it can be 1 year, depending upon the type of business. Depending upon the type of business. In our business, we take advance. We don't give any credit. Are you getting? It depends upon the custom. We are also collecting in advance because of the custom in market, because of custom of that business. Correct now? Because every education they collect in advance only. Correct. Now my question to you all: whenever suppose 30 days is the normal credit terms, so whether the seller will charge some interest for that? No. It means in this case also it will be rupees 1,000. Means in this what journal entry we are doing? What is journal entry? Inventory account debit to cash or bank. I'm happy that you have said inventory account debit to cash or bank. I don't know why. But in Bachpan, you have done purchase account debit to cash or bank. I don't understand why you have said inventory. Means purchase account or inventory account? In Bachpan, you have done purchase. I don't understand why you have said inventory. I have also written inventory because you said I have written inventory. अरे बोल देना यार थोड़ा सा प्लीज थोड़ा सा प्लीज क्या करेंगे इंटरेक्शन करेंगे otherwise I will go on means what? Because I need to complete a syllabus in the minimum in the time whatever I have said. I will not wait much if you will not respond. So can I say you said inventory account debit to cash or bank, but actual entry what you have done in CA Inter CA Foundation purchase account debit to cash or bank. Can I ask one question? Can I ask one question? Purchase is a real account or nominal account? Purchase is a real account or nominal account? You said nominal account. Chalo theek hai. So what is real account? Can you explain what is real account? No, I'm not asking. I'm not asking rules. What is real account? What is real account? Because at CA final level, if I am asking this question, if you are not able to answer, so just try to understand what we have done in our past classes. Real account I'm asking, what is real account? Fast. कुछ भी बोल दो. Real account means asset, all asset, which it will not include intangible asset. One second. All asset or not? Whether data is a real account or personal account. Means so such a confusion means just try to understand if suppose this type of question they ask in interview and if you are confused like this, what impression they will create about you. You are saying data is what? Real account, then so it means you have not studied anything at CA foundation level. How you came to CA final one doubt will come na. अरे बोलना simple. If you will ask to me, suppose you are asking the same question, if I am not able to answer, what you will think about me? कि how Chiranjeev Jain becomes CA and how he is teaching? Yes or no? अरे बोलना रे. That impression will be created or not? The same thing for you also. If I am not an exception, so you are also not an exception. It means कहीं ना कहीं we are weak because of CA foundation studies. We have not studied in a correct way in CA foundation level, and because of that reason, sometimes CA become complicated. Real account means all asset except that. Except that means receivable. Because receivable are what? Personal account. So real account means all asset except that. याद रखो. Because this is very important, you should know the meaning of each and every term. Real account means all asset except that. That means receivable. So any receivable are not real account, that are personal account. Understood? Now I ask you, this purchase account is a real account or nominal account? Now when you purchase represent what? Purchase represent what? What you are purchasing? Inventory. Inventory are what? Inventory are expense. What definition we have done? Inventory are asset. So purchase is asset or expense. अरे भाई purchase account, अभी right now I ask you what journal entry you have done? Inventory account debit to cash and bank, and this is only correct. Purchase account represent what? Inventory. Purchase account represent inventory. So inventory is asset or expense? Asset. So purchase account is what? Asset. Purchase account is an asset. So purchase account is a real account, nominal account? Real account. In Bachpan you have done one more account, adjusted purchase. Adjusted purchase means opening stock plus purchase minus what? Closing stock. So when you minus closing stock, it means the balance has been sold. So inventory become expense when the asset has been sold. So when the inventory is transferred to PL account, when it is sold, in the year when it is sold, it means adjusted purchase is a nominal account. Adjusted purchase is nominal account. Sir, why you are teaching? Sir, please don't teach. Teach CA final. देखो, I am just explaining one thing that in CA final, सुधर जाओ. At CA final, you need to wake up. चलो CA foundation, okay, you pass. CA inter also, okay, you pass. But in CA final, understand why multiple attempt? Because a CA inter student who pass CA inter examination is really, no doubt, they are exceptional. But why we take multiple attempt? If you don't change, then ICI will change you. If you don't change by your own, ICI will pakka change you. One more thing I just want to say, don't take it the other way. Any CA inter student who have scored rank in CA inter, you will see normally they will not score rank in CA final. Normally, not every time. Most of the time. ऐसा you have seen or not? It is होता है. Normally, means I am not saying always. There are many students who have scored rank in CA inter and CA final also. But there are the cases where the student who have scored rank in CA inter have not scored rank in what? CA final. Why? The reason is that only. If CA inter approach was different, CA final approach will be different. If you continue the same approach, difficulty will arise. So I'm just explaining that point initially only. Change yourself, otherwise ICI will change you. Okay, sir. So inventory account debit to cash or bank is 100% correct journal entry. At CA final level, you can pass this journal entry. At CA final level, you can pass this journal entry, no one will deduct marks. However, you can also pass purchase account debit to cash or bank. Okay, sir? Okay, sir? Okay, so I will write inventory account debit to cash or bank only. Now, in this, can you same journal entry? Inventory account debit to payable, to payable with the same amount. But suppose you purchase at credit, but at at more than normal credit terms. Have you understood? Means the payment period is more than what normal credit terms. Means suppose you have been given a credit of 1 year, and suppose the market rate of interest, मान लेते हैं market rate of interest is equal to what? 10%. Market rate of interest, let us assume 10%. So you will charge 10. You means for seller. Seller will recover 10,000 or 10,000 plus 10%. Plus 10%. So 1,000 will be added. Now normally if you see, if they will prepare invoice, have you seen any tax invoice? In tax invoice, whether they will write down 10,000 plus interest or they will write down 11,000 in total. Means they will write down sale of goods 10,000 ki 11,000. They will separate 10,000 plus 1,000. They can do this also, but normally they will never do, because negative, this interest is a negative term. Just try to right now, if I will bifurcate and I'll give you this much interest, what you will think? That will create one negative impression. So you will never find, however, it can be done in the long-term contract. If there is a 5-year contract, it can be done because that is implied. But here normally, what is the pattern of preparing invoice? They will say why sale price is only what? 11,000. And they will never mention any rate of interest also here. This is based on negotiation. You came to me, you asked me 1 year credit, I said 11,000 dena. They said okay. But he also know, I also know 1,000 is what? The interest amount. But that is implied. That will never be expressed. That will never be expressed. It can be expressed also. We can write down in the invoice, but normally it will not be written. Understood? To invoice you have got this. Correct. In this case, बताओ, what will be journal entry? Journal entry will be inventory. The cost price should be 10,000 ki 11,000. 10,000 ki 11,000. Now our India has to say रुक जा. This includes some interest component. And now the cost price will be 10,000. And amount payable is what? Right now 10,000 only. Means recognize cost price at purchase price at normal credit terms. What is the purchase price at normal credit terms? 10,000. Or present value of what? All future payment. If you know the rate of interest, then you can find out what? Means just try to understand. If the 10% is mentioned, then you can calculate. But quite possible 10% is not mentioned. In that case, you can find out what is the purchase price at normal credit terms. That will become the cost price. And this is at Y0. At Y1, what journal entry? Interest expense account debit to what? Payable. How much? Automatically the payable become how much? 11,000. At Y1, one more journal entry we can do. If they ask payable account debit to bank. Means at CA inter level you have not done this. At CA inter level you have not done this. At CA inter level so we have debited inventory at 11,000 only. But now segregate. Chalega. This is a new point. Until now, from this point, no question have been asked at CA final level. Can I say they should ask question from this topic, but they have not yet asked. And if they will ask, most of the students may do mistake. Chalega, but simple. Okay, sir. So what they say? If inventories are purchased on deferred settlement terms means what? When when payment is deferred beyond what? Normal credit period. When the payment is deferred beyond normal credit period. Then purchase price of normal credit term. Purchase price of normal credit term. Purchase price for normal credit terms will be the cost price, which is nothing but present value of all future payments. So either in the question they will give you rate of interest, then you can find out, or they will give you purchase price at normal credit term. They will say purchase price at normal credit term 10,000, but the payment is 11,000. So inventory will be debited to what? 10,000. Understood? Correct. Now what do you mean by purchase price at normal credit terms? Batao. What do you mean by purchase price at normal credit terms? Bolo. Invoice price less trade discount plus non-refundable duties and I'm writing taxes. You'll understand now. Non-refundable duties and taxes plus bolo, plus directly attributable cost. It means you have not listened last class carefully. You have not listened the last class carefully. I said, देखो, I am doing my job. I said this is nothing but purchase price. If you remember, it is written also. Check karo means I have done. Purchase price means what? Invoice price minus trade discount plus non-refundable duties and taxes. When you add directly attributable expense, become cost of purchase. And I have said you, if you remember, that purchase account is debited by this amount only. These three only. Means inventory account is debited. Purchase means what? Inventory account. Inventory account is debited with this cost of purchase of these three. These three only. So purchase price is these three. This much deeper, so they will never ask. But you should know now. They can ask. They can ask anytime. They can create this type of questions. बोलना रे तो purchase price means what? However, the same thing will do in India 16. There is one question. This will be useful at that point. Okay. So invoice price minus trade discount plus non-refundable duties and taxes. Bus. This become purchase price. Chalega. Have you written this? Okay, sir. Then can you see? Then we need to also calculate interest. Interest is nothing but the difference between what? Future payment and present value. Future payment and present value, that will be interest. That interest will be charged to PL as an expense over the period of credit. That interest will be charged as an that interest will be calculated and recognized as an expense over the period of credit and will never be capitalized to the cost price of inventory. Will never be capitalized to the cost price of inventory. Correct. So recognize interest as an expense over the period of credit and will not be added to the cost price of inventory. Why? Because these are not qualifying asset. These are not qualifying asset and therefore it will never be added to the cost price of inventory. Never. One question I have given. A Limited purchase inventory at rupees 60 lakh on 1/4/2016 in 2-year credit, which I have given, which is more than normal credit period. Just try to understand. Suppose this is not given also. So 2 year means what? 1 year means what? More than normal credit period. And if the discount rate is given, it means what? It means discounting required. Chalega. Rate of interest for similar transaction is 10%. Calculate cost price. So what is the cost price? 60 lakh multiplied by discount factor. What is the discount factor? Discount factor is what? For 10%. That is for 1 year. Not time. This much time you will take. 826. I have given 8264. But you are also correct. I am also correct. Institute is also correct. Whatever you are taking, write down that. Okay, na? So this become what? At 4 decimal, this amount become. What is the first journal entry? Inventory account debit to payable. देखो I have written purchase, चलेगा ना? Purchase account debit to creditor. In this book why I have written purchase, because this book is purchased by many students who have not taken classes from me. If I have written inventory, he will say, sir, don't know anything. But inventory is only okay. Inventory at CA final level is okay. And if you see that journal entry, whatever they have done, they have also written inventory account debit. One question we have done with journal, they have also written inventory account debit. That CA final level inventory account debit is only correct. ठीक है ना? तो चलो ठीक है. Purchase or inventory this. Then first year interest will be what? 10% of this amount, that is 4,95,840. Journal entry interest expense account debit to creditor or payable. Then second interest will be, can I say, balancing figure? Balancing figure means what is the total payable? 60 lakh minus these two कर देंगे, because last year interest always calculate as a balancing figure whenever you are using discounting, because then only there can be some approximation difference that you can ignore. So interest expense account debit to creditor, this can be calculated as a balancing figure and then creditor account debit to bank. चलेगा? This also understood. Next point is what? Cost of agriculture produce harvested from biological asset. This I will not explain right now. Let us refer Ind AS 41. Ind AS 41. Biological asset means what? Living animal and living plant. Living animal and living plant. And whatever produced from that become agriculture produce. So agriculture produce become inventory. So agriculture produce from biological asset. Topic you understood? The cost of agriculture produce harvested from biological asset. Topic. So first we need to understand biological asset. We will first do Ind AS 41, then only we can come here. Therefore refer Ind AS 41. However, I can explain right now, but मजा नहीं आएगा. So refer Ind AS 41. Three special point you have understood. These are three special. First is joint product and byproduct. Then deferred settlement term. Then this point is pending from my point of view. Then what is the meaning of NRV? Here we need to find out NRV for finished goods and stock in trade. Both are held for sale. Then for WIP, that is held in the production process. Then for raw material, that are held for consumption. Correct. So for finished goods or stock in trade, nothing to explain. It is estimated selling price minus estimated selling expense. Any explanation required? No. Then for WIP, I think at AS2 also you have done. No, nothing to explain. It is what? First we need to find out NRV of finished goods. NRV of finished goods means what? Estimated selling price of finished goods minus estimated selling expense for selling finished goods, that become NRV of finished goods. From that what will deduct? Estimated cost to complete the production. Estimated cost to complete the production. This will be given in the question only. This become NRV of WIP. Means we cannot find out a sale price of WIP. We cannot find out a sale price of WIP. Therefore, first we find out NRV of finished goods. From that what we deduct? Estimated cost to complete. The objective of this chapter is to find out expected loss on sale of finished goods only. Because we sell finished goods, so that expected loss on sale of finished goods need to be recognized. If NRV is less than what? Cost price. Correct? Means suppose the cost price is 100 and the expected sale price is 120, then there is an expected profit, and as per conservatism we will not recognize that profit, therefore ignore. But when I am saying cost price 100 and expected sale price 80, so what is the expected loss? So that 20 is written down from the cost price of inventory and charged to PL as an expense. So that is written down. We call it written down, and that written down is nothing but impairment loss. However, Ind AS 2 has not used the term impairment loss, but this is nothing but impairment loss. This is nothing but impairment loss. Are you getting what I am saying? Correct. So I think in this also nothing to explain. Correct. Now coming to raw material. From my point of view at CA final level, this is more important. At CA final level, raw material is more important. How to find out NRV of raw material? Once again, can you say we cannot find out NRV of raw material because we don't sell raw material. The valuation of raw material will depend upon the finished goods. which will be produced from that raw material. So in simple word, if I say what India 2 says that if the finished goods which will be produced from the raw material are expected to be sold at profit, then no loss, no write down, then value raw material at what? Cost price, simple. But if they are expected to sold at loss, or we can say if they are expected to sold at a price which is less than their cost price, we can say now if they are expected to sold at less than their cost price, so there is an expected loss. In that case, we should write down what? We should write down the cost price of raw material. So they say that in that case, value raw material at cost price or replacement cost, whichever is lower. Whichever is lower. Simple. The finished goods in which raw material will be incorporated is expected to be sold at more than or equal to cost price of finished goods. Then value raw material at cost price of raw material. Or if they are expected to be sold at below cost price of finished goods, then value raw material at lower of is cost price and replacement cost. What do you mean by replacement cost? Yeah, it means current purchase price. Current purchase price. It is nothing but current. We can say current cost. Current cost. Chalega. Current cost. That will be given in the question. That will be given in the question. Understood? Simple. Or can I say in this way? If the cost price, yeah, we can say in this way. If the NRV of finished goods is more than cost price, then this is the case or equal to. In this case, if NRV of finished goods is less than what? Cost price. We can say in this way also. This is one good question. Let us do that. Hmm? Come to this question. Question 16. Whatever question I am doing, just write down that question before that topic. Okay. You can see they have given opening inventory finished goods 1000, 25,000. Raw material 1100, 11,000. Then purchase 10,000, 1 lakh. Labor means direct labor. Then they have given fixed overhead. Fixed overhead. Then sales they have given how many units sold? 10,000. And this is not relevant. Then closing inventory raw material unit they have given. Finished good unit they have given. The expected production for the year was 15,000 kg. This become normal production. This become normal production now. Due to fall in the market demand, the sale price of finished goods was 20 per kg. This become NRV of what? And the replacement cost for the raw material is 9.5 per kg on the closing date. You are required to calculate the closing inventory as on that date. Correct. So first we need to find out cost price of finished goods. Cost price of finished goods means cost of purchase. Cost of purchase of raw material. Cost of purchase of raw material. Now just try to understand. They have given opening stock of raw material is what? They purchase how much? 10,000. And how much is left? How much is left? So it means first you need to find out what is the raw material consumed, because raw material consumed during that year will become the cost of purchase. So how much raw material consumed? 10,200. It means we need to find out cost of purchase for 10,000 or 10,200. I don't understand why CA Foundation student asked out here. I have never understood. At CA foundation level, should I teach this? What do you think? Sorry, my mistake. CA final level means what I'm saying. CA foundation level, okay. CA inter level, okay. I should teach this. And same question I do in CA inter also. CA inter, I give the explanation also. But at CA final level, should I teach this? What do you think? Should I teach this? And if CA final student is asking, sir, how this 10,200 is coming and why we are taking 10,200, it means what? From my point of view, explanation not required at CA final level. But then also because doubt is coming, so how this 10,200 came? Because we need to find out the cost of purchase for the raw material consumed only, which has been consumed during that year. Okay, this you can find out. Now the question is that, can you see this will be calculated by using FIFO or weighted average cost price method? You know, we will do. This is the next part. What is the cost formula? But you know FIFO and weighted average cost price method. Now in this question, if you apply FIFO, it is coming 11,000 divided by 1100 is 10, and 1 lakh divided by 10,000. This is also coming 10. So if you apply FIFO, it is coming 10 only. And if you apply weighted average, that is also what? 10. But suppose in your exam, this is given 9 and this is given 10, then be careful. Am I right or not? Are you able to understand? Because you need to apply either FIFO or weighted average cost price method. You can't take this as 9, take column 9, or this is 10, take it 10. Ha, 10 in FIFO but jaoge. Because are you able to understand? But can I say, oh, FIFO means what? FIFO means some cost of purchase will be from this and the balance will be from this. Nah, this is first in first out method. And weighted average, you do average basis. Are you getting what I am saying? So be careful in exam. But in this question, it is very simple. It is 10. I hope you have understood whether FIFO or weighted average. The answer will come 10 only. So this become what? 1 lakh 2,000. Then direct labor will add entire. Entire will be added. But fixed overhead will be based on what? Normal production or actual production, whichever is higher. Normal production is given how much? And actual production will be how much? Very good. If nothing is given, we'll assume how much unit they have introduced, that much unit has been produced. Means the ratio is what? If 1 unit of raw material is converted into 1 unit of finished good. That is our assumption. Whenever question is silent, we'll assume that only. But it is quite possible 2 unit of raw material is converted into what? 1 unit of finished goods. Quite possible. But nothing is given, we'll assume that only. So in this case, you can see your actual production is less than normal production. Means there is some abnormal loss. So abnormal loss will not be included in the cost price of inventory. So what you'll do? 75,000 divided by 15,000. How much it is coming? 5. 5 into what? 10,200. This will be added and balance will be charged to profit and loss account as an expense. Understood? In this, though, most of the student will do mistake. Most of the. You may think that, sir, why will do mistake? But in exam, most of the student will do mistake because होगा mistake. चलेगा? Then can I say the total become the cost of production because there is no variable overhead given. This divided by actual production. What is the actual production? 10,200. This become the cost price. What is the NRV given? So we'll value finished goods at what? 20. So your finished goods is what? 1,200 into what? 20. This become the value of closing stock of finished goods. Now we'll find out value of closing stock of raw material. So in this case, finished goods are expected to sold at below cost price or more than cost price. Because NRV is less than cost price. Therefore, raw material should be valued at cost price or replacement cost, whichever is lower. Therefore, it will be 9.5. So 900 into 9.5, the same answer will come. Check karo, they have done this. Good question or not? Good question. This type of question should be asked in exam. Should be asked in exam. Okay, done. This also done. My job done. Okay. Okay, sir. Now, one doubt will come, sir, how to determine this selling price? Means what is the selling price? So this selling price is not the market price. It is not the listed price. It is not the quoted price. Quoted price and sale price are different. The price at which the product are quoted may not be the sale price. May not be the sale price because that is the maximum retail price. At that price we are not selling. Got this point? It is not a market price. It is not a quoted price. So what is this? This is the sale price which are expected by the management. But how to determine that? How to determine that? So let me give you one case study for that. What will be the expected sale price? Suppose on 31st March you have 20,000 units left. 20,000 units left. Okay. Out of this 20,000 units, and suppose the cost price is 100. Cost price is 100. That will be known to you. Already calculated. Now out of this, on 31st March, 5,000 is under a contract. 5,000 for already a contract has been made. The contract to sell at 110. Understood? Already contract has been done on 31st March or before 31st March to sell at what? 110. The contract has been done. The invoice might be prepared. The question is that is an inventory or sale? Not. Even though it is not moved, sale may happen. Means the contract has been done, but control is not transferred. Control is not transferred. This we'll discuss when we'll do Ind AS 115 revenue recognition. Okay. If the control has been transferred, even though the position has not been transferred, it will be revenue. Then it is not an inventory. So when we'll do Ind AS 115 detailed discussion will be done. So right now I'm assuming that control has not been transferred, therefore it is not a sale. This is inventory. Inventory, but can you say contract has been done? So for this NRV is what? 110. For this NRV is 110. I'm assuming that selling expense is 0. Selling expense is 0. Okay. So balance how much left? Balance is 15,000 units. But these are not under a contract. So out of this, what our Ind AS 2 says that find out how many units, suppose out of this 10,000 units are sold before what? Before what? Batao? Approval of financial statement. The same example I have taken in Ind AS 10. If you remember. Out of these, some units are sold before approval of financial statement at rupees, suppose, at rupees, don't ask me why, at rupees 80. But it is not a non-adjusting event, means nothing has happened. Nothing has happened. Suppose fire happened after 31st March, then it become non-adjusting event. Already I have taken example. So right now don't ask me why it become 80. Suppose it was sold due to some market fluctuation, etc. Correct. So for this NRV become what? For this NRV become 80. For this NRV become 80. Understood? What is the balance left? Balance is what? 5,000 again. For the balance, so that remain unsold on the date when the financial statement are approved. This remain what? Unsold. So it will be sold after approval of financial statement. Quite of course understood. For this, we'll take fair estimation given by management. Given by management. Whatever fair estimation they have given, suppose they have said it can be sold at rupees 70. They are saying at rupees 70. So 70 become NRV. Then for this NRV become 70. Understood? Have you understood? Till now, no question of this nature was framed by ICA, but recently in CA Final Study Material, they have given one question of this nature. Now this type of question they will ask in MCQs. Scope has increased. So now this type of question 100% they may ask in what? Multiple choice question. Good question also. चलेगा आगे चले. Have you understood? आगे चले. थोड़ा सा you need to write down with me. Otherwise I will be very much slow. ठीक है. Will just write down with me because when I am writing now, so you can also write down at that point of time. Have you understood? This particular point, whatever I have said, this is very much important for stock audit also. Whenever you do stock audit, always identify those inventory for which contract has been done but the control has not been transferred. For that, the sale price under the contract will become NRV. For balance unit, we need to do some more assessment. चलेगा? You can see what is given. How to determine the sale price. First preference will be given to binding agreement on reporting date. Whatever agreement you have done. Second preference will be given to sale agreed before approval of financial statement. Last preference will be given to fair estimation given by management. Okay. There is one question also of this nature. However, now you can do it. Question. Yeah, this question. Question 14. At the end of his financial year, company P has 100 units of inventory on hand recorded at a carrying amount of rupees 10. So carrying amount become cost price. The current market price is 8 rupees per unit at which this unit can be sold. This can be sold. This is market price. Company P has a firm sale contract with company Q to sell 60 unit at 11 per unit, which cannot be settled net. Which cannot be settled net means what? It is not a derivative instrument. This you will automatically understand when we'll do some other chapter, means financial instrument chapter. So right now you ignore it. Estimated incremental selling cost is rupees 1. Determine NRV of the inventory of company B. Most of the student will take what? For the entire unit they will take 11 minus 1. But for 60 unit it is what? 10. And for the balance 40 will take what? 8 minus 1 means 7. 8 minus 1, 7. Dangerous or not? Super dangerous. First, when you are not reading this question, or even though if you are not reading the question, you don't know the concept also. Super dangerous question exam. This small point make the syllabus easy if you know this. Okay, not yet asked in exam. Till now not asked. Cost formula nothing to teach. This is what CA foundation level, CA inter level. Correct. How to find out what will be the cost formula to determine the cost price per unit. So that depends upon whether the inventories are ordinary interchangeable or whether the inventories are not ordinary interchangeable. When I say inventories are not ordinary interchangeable, it means what? They are expensive item. Expensive item means suppose you are doing manufacturing of an aeroplane. Can you interchange one aeroplane with other aeroplane? Yes, that will be customized. In that case, you cannot find out cost price on average basis or FIFO basis. In that case, you need to identify the cost price per unit. Each unit, what is the cost price? Therefore, our Ind AS 2 says that apply specific identification method. It means you need to identify the cost price of each unit separately and then find out the cost price of that particular unit. Means unit costing. For this, we'll apply unit costing. We call it unit costing as per the information given in the question. As per the information given in the question. But inventories which are ordinarily interchangeable means, can I say similar units, homogeneous unit? In that case, there are two situations. Can you find out the actual cost price? Well, if yes, if you can find out the actual cost price is determinable, then apply either first in first out method or weighted average cost price method. Of course, you know this. If you don't know, go to CA foundation level and learn there. I will not teach you. What is FIFO? What is weighted average cost price? At CA final level, so I should not teach this. Of course, you know that LIFO is not applicable both as per AS2 as well as Ind AS 2. Only FIFO and weighted average cost price method. But sometimes what happens, we are not able to identify the actual cost price. In that case, our Ind AS 2 has given two techniques for valuation, two techniques for inventory valuation. Can I say in case of manufacturing organization, quite possible we are not able to find out the actual cost price. What is the cost price attributable to the production? That is not possible. In case of retail organization, trading organization also, suppose if you see that retail trading, in that case also if you are not maintaining the stocks, means suppose you are not maintaining the stock in computerized system, so this is very difficult to find out. If it's very difficult to apply FIFO and weighted average cost price method also. For that, inventory recording is also required. But if you are not recording that, then you can't apply FIFO and weighted average cost price method. In that case, what need to be done? Can you say that we can't find out a cost price of closing stock will not prepare financial statement? No. Therefore, India's 2 has given relaxation. In that case, you can apply two techniques to determine the approximate cost. To find out the approximate cost. Therefore, I have written approximate cost method. So they have given two methods. One they have given for manufacturing, one they have given for non-manufacturing, or you can say trading or retail. For non-manufacturing, what is the method? Adjusted selling price method. Adjusted selling price method means what? What do you mean by adjusted selling price method? Bolo? It means you first find out selling price, sale price of closing stock. Sale price of closing stock means number of units multiplied by sale price per unit minus what? Profit margin. Whatever profit margin is there, that you deduct. It is both will be given the question. Don't expect this type of question in exam. But once again, sometimes this question only become difficult. Okay, but super easy understood. Adjusted selling price method is also known as retail price method. Retail price method, also known as retail price method. For manufacturing, they have given which method? Standard costing. This so you have done in your costing subject. You know better than me. However, standard costing question they will never ask in FR exam. They may ask you MCQ question. They will give you one case study. This is a manufacturing organization. We are not able to find out what actual cost. Then which method is applicable? In that case, you need to say yes. Standard costing is applicable for manufacturing and for non-manufacturing adjusted selling price method. Same question has been given. Means this question is not yet asked in exam, but now with MCQs higher chances. Write down question 9. Read it by your own. Here write down refer question 9. Refer question number 9. You will be able to understand. Only which method is applicable that we need to identify. So one is manufacturing. For manufacturing what? For trading what? Adjusted selling price or retail price method. Just write down refer question number 9. Cost formula also done. Then comparison of NRV and cost price. Very simple. Can comparison will do at the end of the year. Now to compare, what India has to say that we need to compare item by item basis. Item by item basis. However, we can also do on group basis or category basis. If they are similar units, what they are saying, if cost and NRV should be compared for each separately identifiable item of inventory or group of similar inventory. Or group of similar inventory. Means first preference will be given to item wise. But if all the items are similar, we can create group also for comparison purpose. So not able to understand. Means suppose you are dealing in rice and you are dealing in wheat also. In rice you have quality A, quality B and quality C. In wheat you have quality P, quality Q and quality R. Understanding? So this become item wise. Correct? So we need to compare cost price and NRV item wise. This, 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 and this become lower. This become lower na? This become lower. Or if suppose A, B, C are similar units, means their price are also similar, not much difference. Then you can group also. Then this become group. And this can be also done if circumstances require. This is group. Understood? So either item wise or group wise, but not total wise. Can you do in this way? This total, this total. This comparison is not permissible. Means rice total, wheat total, grand total, then comparison. That is not permissible. This become grand total ना रे? Grand total. Grand total ही तो बोलते हैं. ठीक है ना? The grand total comparison is not possible, or comparison cannot be done classification wise. Means raw material total, finished good total, that is also not permissible. That is also not permissible. If question is silent, always do item wise and question will be silent only. And question will be silent only. Correct? Understood? So group of similar inventory rather than for inventory in total, this is not possible. Total wise is not possible. Total wise is not permissible. Okay, sir. The next point, this 9 and 10 are very important till now, not asked in exam once again. But AS2 is silent regarding this. AS2 was silent. When I say AS2 was silent, means even though AS2 was silent, then also we used to do this only practically. But AS2 has not given such para in their content. First is reverse or write down. Reverse or write down. Let me explain. Let me explain what they have given. Suppose you purchase 1 units at Y0, the cost price was 100. And this is Y1, Y2, Y3. And here the units remain unsold. Here the units was unsold. Here also unit was unsold. Can you see if it is sold, then to Ind AS 2 is not applicable only. Correct. Then at year end 1, we'll do comparison cost price 100. NRB, you'll find out, and suppose 90, don't ask me why 90. 90. Correct. So in this case, value is what? Value is 90. So how much write down? 10. This write down will be transferred to? So this is known as write down of inventory, or we can say loss of writing down. And this will be transferred to PL. This will be transferred to PL. चलेगा? Okay, sir. बोल देना. Okay, sir. Next year, once again, you will compare cost price. Once again, we'll do reassessment of what? NRV. We'll do reassessment of NRV. NRV might increase. And suppose it is increased to 95. But what is the value now? 95. So you can see the carrying amount has been increased by what? 5. So it has been increased by 5 now. So this 5 will be transferred to income side or expense side. No, this is not an income. This is not an income. This is a reversal of previous write down. This is reversal of previous loss. The reversal of previous loss is reduction of expense. Reduction of expense means you need to reduce it from inventory expense. You can write down in the income side. Are you getting? You can't write down income side. When I am saying income, income will be transferred to what? Either revenue or other income. You can't write down income side of SOPL. So this is what? Reversal of previous write down. And will be reduced, will be treated as reduction of inventory expense. Inventory expense of the year in which reversal happened. So this will be reduction of inventory expense of which year? Year 2. चलेगा. Then third year, suppose cost price is 100 and suppose market improve and now it become 105. This happened in COVID-19 period. Suppose it was COVID-19 period. So this situation might happen. Now improve, market situation improve. Now we can sell at reasonable price. In this case, value will be what? 100. How much increase again? This will be also what? Reversal of previous write down. Means reversal cannot exceed previous write down. Reversal cannot exceed previous write down. Of course, that is the formula. Have you understood? Correct. I hope you have understood. चलेगा. Correct. Understood. Just write down one for your understanding. If amount is material, will be disclosed as an exceptional item in what? SOPL. So if this write down and reversal write down, this amount is material, then that will become exceptional item in SOPL. How to present exceptional item in SOPL we'll discuss where? In India's one. And refer what? India's one. चलेगा. Means there are two presentations. In SOPL. If immaterial, under expense, we write down changes in inventory. Changes in inventory means what? Opening stock minus closing stock. So this closing stock, then add on at NRV. Understood? Closing stock write down at NRV. NRV means when NRV is lower than cost price, then means in this situation I am saying. Are you able to understand? Better write down carrying amount. NRV समझ जाओगे ना? Or better write down carrying amount. Carrying amount means cost price and NRV whichever is lower. Better write down carrying amount. That is write down carrying amount means cost price or NRV whichever is lower. This when the amount is immaterial, and normally you do this only. In most of the cases you do, means if question is silent in exam, so we do. However, till now they have never asked this type of question in exam, whether it is CA Inter or CA Foundation. Final में तो छोड़ दो. There is no such chapter only. But if the amount is material, I'm explaining this part because you as an auditor should know this. if material. Then when you are writing under expense, changes in inventory, in that case, opening stock minus closing stock will come at cost price. Understood? Are you getting? Then write down profit before exceptional item, and then from this we deduct what? Loss due to write down. Have you understood? Ultimate answer will remain same. This will be this presentation. Ultimate answer will remain same. Have you understood? Correct. So just only for your general knowledge, because this I will give as an example in exceptional item, so you can link it. You can link it. Chalega? Yes, sir. Have a not important from examination point of view. They will not go to this level. This is only for your practical understanding. Okay, sir. Written? What? Loss due to write down. It can be reversal also, huh? If reversal, then plus. Okay, sir. Yes, sir. Now you can understand this entire 9 and 10. NRB should be reassessed at each reporting date. If NRB increases, the amount of previous write down is reversed, so that new carrying amount of inventory now become lower of cost price and revised NRB. Simple. Recognition of expense. So when inventory is recognized as an expense, when it is sold, correct. Even the carrying amount of inventory is recognized as an expense in the year in which it is sold. That is nothing but we do opening stock plus purchase minus closing stock, correct. So recognize the carrying amount of inventory sold as an expense in the period in which related revenue has been recognized. When the inventory is written down to NRV, then recognize such write down as an expense in the period in which write down occurred. When reversal write down occur, recognize as a reduction in the amount of inventory recognized as an expense in the period in which reversal occur. I hope now you have understood ABC. Already I have explained with that example. Understood? So these two, B and C is for unsold inventory, na? This is for unsold inventory, and this is for sold inventory. Point number A is for sold inventory, and point number B and C is for unsold inventory. चलेगा? Scope. Chapter is over. This standard applies to all inventory except financial instrument. Financial instrument means deals with equity shares, other investment. So suppose you are doing trading in equity shares. You are doing purchase and sale of equity shares, and that is your ordinary business. Quite possible. Then case it will meet a definition of inventory, because inventories are assets which are held for sale in the ordinary course of business. So if you are doing business or trading in equity shares of other company, that will become stock. That will meet a definition of inventory. So this is no. Of course, it meet a definition of inventory, but it's scoped out from this chapter. Scoped out from this chapter. So financial instrument will be covered under Ind AS 32, Ind AS 109 coming soon in your life. You can add an example. Hello? Equity shares held as stock in trade. Stock in trade, right? No? Equity share held as stock in trade. It can be any other instrument also. It can be any other instrument also. Then biological asset related to agricultural activities. So biological asset means living animal and living plant. Right on? Biological asset means living animal and plant. So any biological asset which are related to agricultural activities will be covered under Ind AS 41 coming soon. And agriculture produce at the point of harvesting. Agriculture produce at the point of harvesting, Ind AS 41 is applicable. Ind AS 41 is applicable. Correct. What do you mean by harvesting? Harvesting is that point of time when agriculture produce are detached from biological asset. So mango tree. Mango tree is an example of what? Biological asset. Mango is an example of agriculture produce. So when mango is plucked, means detached from mango tree, that point of time is known as what? Harvesting. That is the point of harvesting. Okay, at the point of harvesting, Ind AS 41 is applicable. But after harvesting, which Ind AS is applicable? Ind AS 2. Understood? So that point we have not yet covered. थोड़ा सा बता ही देता हूँ, because otherwise you will not be able to understand this. Correct. What they want to say? This is mango tree. So at the point of harvesting, this is the point of harvesting. Which Ind AS is applicable? Ind AS 41. And Ind AS 41 says that measure at, it will be initially at this point of time, it will measure at fair value less cost to sell. Right on, full fair value less cost to sell. Fair value less cost to sell. So at this point of time, it will measure at fair value less cost to sell. Understood? So this is known as point of harvesting. And once harvested, means harvested, now it become harvested agricultural produce. So this will become inventory, because this will be either held for sale in the ordinary course of business or held for consumption. So either it will be raw material or it will be finished matter stock in trade. Correct now. So this will be inventory. So for inventory, which Ind AS will be applicable? Ind AS 2. Now Ind AS 2 says which price? So it is cost price or NRV, whichever is lower. So NRV we can calculate as per the requirement in AS 2, but what is cost price? Very good. So this will become what? This will become cost price. So cost price will be equal to what? Fair value less cost to sell. At the point of harvesting. At the point of harvesting. You have understood now? That point only we left. Now let us read that point. Have you understood? NRV we can calculate. NRV will calculate at the end of year, means on 31st March reporting date. So for application of Ind AS 2, cost price will be equal to fair value less cost to sell at the point of harvesting. Now if you read this point, you will understand only, even though we left. As per Ind AS 41, agriculture produce at the point of harvesting are measured at fair value less cost to sell. This is the cost price of such agriculture produce for application of Ind AS 2. No, done. This is also done. Means can I say any agriculture produce at the point of harvesting is scoped out from this chapter? But harvested agriculture produce is not scoped out. That is covered in this chapter only. And for that purpose, that fair value less cost to sell will become what? Cost price. I hope now that you have understood this too also. B and C. B and C. Correct. One more point, of fair value and NRV are two different terms. When I am saying fair value less cost to sell, that is not NRV. Fair value less cost to sell is not NRV. NRV and fair value are two different terms. When I say fair value is always measured as per Ind AS 113. Ind AS 113 coming soon in your life. But NRV is measured as per what? Ind AS 2 only. NRV, how we have determined? As per Ind AS 2, the explanation is given under Ind AS 2, but for fair value explanation is not given under Ind AS 2. That is given, means there is one specific Ind AS for measurement of what? Fair value. Ind AS is totally focused on fair value measurement. Means whatever Ind AS will do after this, will say at fair value, at fair value, at fair value. So for fair value, one is specific Ind AS 113. Whenever I say fair value, you will go where? Ind AS 113. But that will be our last chapter. Because how to measure that we'll do at the end. Chalega. So fair value and NRV are two different terms. NRV is based on entity's condition. See, at what price entity can be sold. Sorry, at what price entity can sell it. Understood? So NRV is based on entity's condition. But fair value is based on market condition. At what price it can be sold in the market. There are two different viewpoints. When I say NRV based on entity's condition. Fair value is based on market condition. Are you getting what I am saying? Are you able to thora? But whenever I say fair value, you think about market. These are totally scoped out from what? Ind AS 2. But there are two points they have given for which Ind AS say that Ind AS 2 says that Ind AS 2 will not be applicable for measurement purpose. See, how to do that measurement? One exception has been given. Other point will be applicable. Disclosure point will be applicable. Correct now. Meaning point will, means everything will be applicable as per this chapter. Only measurement, cost price or NRV which are lower, that will not be applicable. For these two items. What are that item? Producer of agricultural and forest product. Agriculture produce after harvesting, means same thing. And mineral product. To the extent they are, something missing. They are measured at NRV. To the extent they are measured at NRV. No, not. It's different point. Write down now. I know it is not written. Some typo mistake is there. Something is missing here. Means what they want to say? Any producer of agriculture and forest product, means if I say forest product, or agriculture produce after what? Harvesting, or mineral product. Mineral product means coal from coal mines. That become mineral product. For this option has been given. Two options. Well, either you apply Ind AS 2. If we apply Ind AS 2, then what is the valuation criteria? Cost price, NRV, whichever is. But for this now, cost price determination is very difficult. As you have seen for agriculture produce after harvesting, so they have given if fair value less cost to sell will become the cost price. But for mineral product, there is no Ind AS. Mineral product at the time of extraction, there is no such Ind AS. So how to determine the cost price? One question will come now. So therefore, one option has been given. To the extent for measurement purpose, it can be measured at NRV. At NRV only. Means option is there. To the extent they are measured at NRV. And can you see if they are measured at NRV, so initial recognition also at NRV. Subsequent recognition also at NRB. So any difference between this NRB will be transferred to PL. Will be transferred to PL. So initial recognition also NRB. In this case, initial recognition at cost price. This is subsequent recognition. Are you getting what I am saying? Are you able to understand? Yes, sir. So in this case, when such inventory or major NRB, changes in that value are recognized in PL in the period of change. Second point, any commodity broker trader. What do you mean by commodity broker trader? Means any broker who do not have their own warehouse. They will purchase and then supply. And they will ask the supplier to transfer the product directly to the customer. They do not have normally their own warehouse. Dalal, middleman. Yeah, this is big business in India. Big business. Okay. Can I say these are commodity broker trader? So normally what is the market trend? They also don't know the cost price. Means there is difficulty to find out their cost price. And as per the industry practice, they measure their inventory at fair value. At fair value. So what they have given? Commodity broker trader who measure their inventory at fair value less cost to sell. Means option has been given to them. So for commodity broker trader, for their inventory, either apply cost price or NRV, whichever is lower, or they can go for what? Fair value less cost to sell. Now whenever I write on FBCS means what? Fair value less cost to sell. When I write on only FB, fair value. These are two different terms, fair value and fair value less cost to sell. And NRV is totally different from fair value. When I say fair value, go to what? Ind AS 113. How to find out fair value? I can't explain because Ind AS 2 is silent regarding that. So how to find out fair value? We need to go to what? Ind AS 113. But option has been given, and if they are measuring at fair value less cost to sell, any change will be transferred to profit and loss account. Correct. 1 second now, just try to understand this. All para become important due to MCQs. Previously there was no such scope, and believe me, I used to give time, but I used to know that question will never be asked from this topic. But now with MCQs, any para become important. Okay. So when such inventories are measured FBCS, changes in FBCS are recognized in PL in the period of that change. One note I have given specifically, NRV may not be equal to fair value less cost to sell. Now just try to understand. This become changes in accounting policy. You can change. We will go to India's 8. India's 8 deals with changes in accounting policies. So of course you can change, but how, when you are changing, what to do, that will discuss under India's 8. You should ask Mr. Yes, we can change because changes in accounting policy is permissible. But a very strict accounting treatment is given. What is that strict accounting treatment that will discuss where? Correct. So of course this, if they change, this becomes changes in accounting policies. So of course that is permissible. But when it is permissible and when, what will be the accounting treatment for such change, that will discuss under India's 8. Okay. Chalega? Disclose a very simple accounting policy we should disclose. Means at what price we are measuring, what is the formula, that is the accounting policy. The total carrying amount of inventories and the carrying amount in the classification appropriate to that entity. So we need to find out total carrying amount, but classification wise. Classification wise means what? If for stock in trade separately, finished goods separately, raw materials separately, WIP separately, stores separately, correct? And store, better than spares. Store and spares, if you want to write on item, I'm writing spares. Spares separately and loose tools separately. These are the common classification. Common classification. Have you seen any financial statement? Read any financial statement? Which company? Any listed company have you seen? Those who are in Big Four, they have seen. But those who are not in Big Four, they have not seen. So what you should do, those who have not seen, I'm just giving one suggestion to you. And of course, you will not follow my suggestion, I know. In every batch I give, but if you follow, it is always good for you. So just today only download the annual report of any listed company. They are following India's. And whenever you have free time, now just go through that. Financial statement, don't read director's report and corporate governance, that faltu cheez. Only financial statement means what? SOPL, balance sheet. First SOPL balance sheet with notes to account, related notes. Then if you have time, read cash flow statement also. Correct? Are you getting what I am saying? But with related note. Whatever you have understood, give tick mark. Whatever you have not understood, give star mark. Everything will be covered in my class. Everything will be covered in the class. So when you see that companies, you will find out spare and loose tools. In simple companies, small company, you will not find out this. Have you seen this spare part and loose tools? Inventory class, you have seen. Unlisted company. The listed company you will find out. Unlisted company, maybe if the net worth is very high, then you can find out. Correct now. For that also India is applicable now. But small company normally we ignore this thing. Spare part, loose tools. Now the question is that this spare part and loose tool, what is this? Spare part. Can you say when I am saying spare part, to spare part of machinery? Spare part for inventory? Spare part for machinery. Loose tool means what? Any equipment which is used for repair and maintenance. For example, if you have bike, you will see that there is some loose tools. Tools available in the bike for repair, servicing, equipment will be there. That become loose tools. So these are whether PP or inventory. That explanation has been given under India 16. Coming soon after this, we'll do India 16. So just write down refer. देखो what linkage I am doing now, no one will do this. This ना मतलब मजेदार हो रहा है, believe me. मजेदार. You are not able to understand right now. But I think I have given one commitment. Whether I have given one commitment to you in the initial first class, no commitment. I forgot to give one commitment. Commitment is that I never give commitment of good marks. I never give commitment of pass in CA final exam because that depends upon your effort. Whether you will score good marks in FR, whether you will pass, whether you will score exams, and believe me, I never give because that totally depends upon your effort. But I give one commitment that after learning from my class, you can challenge any CA of India as per India's is concerned. Means you can do discussion with them, and most of the time you will win. Means whatever you will give your suggestion, yeah, your conclusion, that will be right. Correct. That is my commitment. But you need to listen entire classes carefully. Correct. So leave in this just I don't leave for India 16. Automatically we'll cover this point under India 16. This two we have covered now. Now of course one doubt will come. So what about spare and loose tools? I am only saying give me some time. This will be covered under India 16. But I have given the common classification. You will find out this type of classification in the financial statement of listed company. Listed means any company. Those who are following AS perfectly. Then carrying amount of inventory carried at fair value less cost to sale. Now we have understood there are some inventory which may be carried at fair value less cost to sale. Exception is there. So if that is the case, disclose that. Amount recognized in PL. Now you will appreciate this. This is the carrying amount of inventory recognized as an expense during the period when? When? Carrying amount of inventory recognized as an expense when? When they are sold. So carrying amount of inventory recognized as an expense in the period in which it is sold. Yes or no? अरे बोलना रे. Then add amount of any write down of inventory. The write down will be added. If exceptional, then we'll go to exceptional item. And the amount of any reversal of any write down. Correct. This I have just given from examination point of view. Suppose they ask you, they have given one case study and they will ask you what is the total inventory expense. So this will be the total inventory expense. How to present, already I have explained in material and immaterial wala point. And we'll do SOPL format also, there also I will explain. Chalega, understood this point? Okay, sir? Yes, sir. The last point, any carrying amount of inventory, if they have some restriction means they are placed for some loan taken, whatever, so there is some restriction on sale, then that disclosure need to be also given. Suppose it is hypothecated or whatever, then that disclosure should be given. Chalega, disclosure also done. Difference between Ind AS 2 and AS 2. Subsequent recognition of expenditure and reversal write down. Both for both AS2 is silent, but Ind AS2 deals. Already we discussed. And RB versus fair value, AS2 is totally silent. Means AS2 also has used the term fair value, but they have not explained what actually fair value means. But that explanation is given under Ind AS. Deferred settlement term, AS2 do not deal. AS2 does not deal. Means I have not written silent. I have written AS2 does not deal. So there is no such a concept only. Means we recognize at whatever invoice price, whatever is given, including interest. But here we do segregate. Guidance has been given. Machinery spares, AS2 has given guidance. But in AS2 is silent because that guidance is given where? The same guidance is given under Ind AS 16. Got this point? Chalega. Over. Let us come to some more questions. But this chapter, my what to do, what I will do. But let's already two good questions I have taken. Two good questions I have taken now. Let me find out if there's some more good question. In this question, one doubt will come. Question 6. You can see question number 6 is which category? First category. Then also one doubt is there I am saying. So it might happen if you are reading this type of question, doubt may come. So what is the doubt? Is one. Point number 10. Brokerage commission paid to indenting agent. Indenting agent. Whether it will be included in cost price. Now doubt will come. So what do you mean by indenting agent? There are two type of brokerage. There are two type of commission. One is the commission when you purchase. One is the commission of brokerage when you sell. Yes or no? So indenting agent means from the broker from which you have purchased, and therefore it will be added. Correct na? Indenting agent you just write down means at a time of purchase. देखो just try to understand. Very rare chances this type of question they will ask. But can I say in the total question, full question they can add a broker paid to indenting agent. Broker is paid to the selling agent. So selling agent will not be included. For example, they have given this also. Sales commission paid to sales agent. This will not be included. Na? But point number 10 will be included. You can see item number 10 is allowed for inclusion in the cost price. So when you read, then only doubt will come now. If you will not read, doubt will not come. I know where doubt may come because I have an experience of teaching. This is my, I don't know which batch number is going on final. More than 50 batch. Correct now. So which batch number is going, I also don't remember. So I have an experience of teaching. At this point of time, student may have doubt. Therefore, that highlight too I'll give you. But in read now. Yes, this can be a doubt, possible doubt. This question already we have done. Similar question we have done. Same question we have done. Kya? We have done. 9 already I have said read it. These all are very easy question. If I will read, you will say, sir, what you are doing? Sir, please don't do this type of things. 16 already I have done. 17 is 17 देखो क्या लिखा हुआ है. Compare on an item by item basis or group basis. This type of question they will ask. They will never ask at CA final level. But item by item basis, you know, group basis, you know. If nothing is given, what you'll do? This question 19, just write down, read it once. It is very simple question. If doubt will come, I will discuss. You can understand. Acha, if there is some debtor, impairment loss will be covered under Ind AS 109. So there is something given about debtor impairment loss, I think. So that will be covered under Ind AS 109. But you will be able to understand the solution only by your own. This is a good question. RTP, MTP till now not asked in exam. Whenever, what is my impression? Whenever there is one question which have been given RTP, MTP for 2 or more than 2 times, highly probable from examination point of view. Highly probable. So RTP, MTP and recent MTP, high chances this same to same question will come. Abhi, for the first time we are doing this question. Let's see whether you are able to answer or not. If you are able to answer, Jindabad. On 31st March 2001, the inventory of ABC Limited includes spare part which it had been supplying to a number of different customers. This spare part is held for sale. This is not a spare part held for use, which I have seen a spare and loose that are held for use but become inventory as per India 16. This is the spare part held for sale. That is the inventory only na. Correct? Don't be compared spare part India 16. Correct na? The cost of the spare part was 10 million and based on the retail price at 31st March 2001, the expected selling price of spare part is 12 million. On 15 April means after, due to market fluctuation, expected selling price of spare part in stock reduced to 8 million. The estimated selling expense required to make the sales would be 0.5 million. Financial statement were authorized by Board of Directors on 20 April. So 15 April, 20 April. It is event occurring after balance sheet date. But adjusting, non-adjusting. Adjusting. So what will be NRV? Adjusting. You have understood with my explanation. Become easy. Become easy. So what will be NRV? 7.5 NRV. What is the cost? 10. What is the write down? 2.5 is the write down. First answer you got. They have asked in two parts. On 31st March 2001, what is the valuation? You can do it. Okay. Then at 31st March 2002, the directors noted as such inventory is still unsold and lying in the warehouse of the company. The director believed that inventory is in sellable condition and active marketing would result in an immediate sale. Since the market conditions have now improved, estimated selling price now 11 million and estimated selling expense are 0.5. So now what is the NRV? What is the cost? So what is the value? So how much reversal of previous write down? This will be transferred to PL as a reduction of inventory expense. This much you should write down. So whatever I have done, the question is based on that only now. Just try to understand. If I am not doing this question in class, it means whether I have covered or not covered. Covered. So what is important? Doing question in class, that is important, or doing concept in the class is important? In inter question, final concept. They may change this question now. They may change this question. If you know India's 10, if you know India's 2, you can write. Of course, you can write down. This question, once you do by your own, this thodas are related to costing hourly basis. I hope you can understand. If you have not understood, then I will do. Because how much I will do. So this question once you do and write on MRQ also, must revise question before exam. If you have doubt, I will do. Okay. Once you do it, from my point of view, you will be able to understand. My help is not required. But good question till now not asked in exam can be asked. This is very simple. You can do it. 23 we have done. 24 we have done. This is one more question. Chalo. On 5th April 2002, fire damaged a consignment of inventory at one of the Jupiter's Limited warehouse. 5th April, fire means after reporting date. This inventory has been manufactured prior to 31st March 2002, costing rupees 8 lakh. The NRV of inventory prior to damage was estimated to 9.6 lakh. Because of damage caused to the consignment of inventory, the company were required to spend an additional cost of 2 lakh on repairing and repackaging of the inventory. The inventory was sold on 15th May 2002 for the proceed of 9 lakh. So this was sold after reporting date. The accountant of Jupiter Limited treated the event as an adjusting event and adjusted this event of causing the damage to the inventory in his financial statement and accordingly remeasure the inventory as follow. Cost is how much? NRV is, they have given 9.6 minus 2 lakh because some repairing expense will be done. Understood? And what was the date of approval? They have not given na. Date of approval is not given na. Chalo, they have not considered this 9 lakh. It is quite possible sale has happened after approval of financial statement. Quite possible. Chalo, what they have done this. Analyze whether the above accounting treatment made by the accountant in regard to the financial year ending is in compliance of Ind AS. If not, advise the correct treatment along with the working for the same. But correct or wrong? Wrong. It is adjusting or non-adjusting? Non-adjusting. You require my help. So what will be the correct accounting treatment? What is the cost price? What is the NRV? 9.6, and this 2 lakh will not be deducted. So 9.6. So therefore 8 lakh. Therefore no write down. Therefore in the balance sheet the inventory will be shown at 8 lakh. Answer is given. Read it by your own. This already we have done similar question 26 already asked in exam. This also is very simple. You can do it. This all you can do it. This once you try, whatever I am saying now, do. Okay, because these are all calculation based. You can do it. My help is not required. See a final level. This write on MRQ must revise question before exam. 31 already we have done. This balance you can do it. Okay, balance you can do it. You can do it balance. Okay, so this chapter is completed from my point of view. So how many Indias completed? 3. This is which day? 5th day. In 5 days we completed 3 as well as the introduction. Okay, na? In the volume 1, most of the chapters, volume of question bank, most of the chapters are of 1 day only. Okay? The next India 16 I will take some time. Because India 16 if you understood enough perfectly, so it will help you in other Indias. However, India 16, India 16, India 16 and AS10 are almost 99% same. Why? Because AS10 when it was revised, it was copy paste of IS 16. So because it was copy paste of IS 16 and India 16 is nothing but IS 16, so both are same. So only this India 16 and AS10 from inter and final point of view is exactly same. If you have done AS10, actually we should not invest much time in this. But I know what you have done and I know what you have forgotten. And because that reason, explanation and discussion is required. So we'll take a break. After break, we'll do India's 16. Okay, sir? चलो now. Can we start once again, everyone? Yes, sir. Now let us start a new chapter, property, plant and equipment. Important chapter from exam point of view. That on important chapter. Why important? Because if you have understood this India 16, then you will also understand India's 38 intangible asset, because most of the point of India's 16 and India's 38 are same. Then India's 40 also you will be able to understand, because that is for investment property. In that also most of the point are same. So first, property, plant, equipment. So sir, what is the meaning of property? What is the meaning of plant? What is the meaning of equipment? When we say property, property means what? Property means land, building, or any part of building, or land and building together. Land and building together. Property means this only. चलेगा. Plant means what? Any tangible item which is required to produce any item. So any equipment, yeah, any tangible item which are used for production purpose, that is plant. Apart from whatever is left in this chapter is equipment. Whatever is left, that will be equipment. It can be furniture, it can be electrical part, it can be any other part. That become equipment. Therefore, the name is property, plant and equipment. Okay. Now, first, what is the meaning of property, plant, and equipment? So we'll call it PP. PP is a general term, can be used in exam also. So PP are tangible item. Of course, we are discussing about tangible item, but all tangible items are not PP, as we have done inventory. Inventory is also tangible item, but not PP. So which tangible item will be PP? Two conditions. They have given two conditions. Both the conditions satisfied, then it is a property, plant, equipment. First condition, are held for use in production of goods or supply of goods or services. The production of goods or supply of goods or services. Or for rental to other. It is given on rent to other. For rental to other. Or for administrative purposes. Or for admin purpose, means office purpose or whatever. Admin purpose. Nothing to explain. Simple. And second condition, which are expected to be used for more than one period. Which are expected to be used for more than one period. One period means accounting period. Accounting period. Which are expected means, of course, when you are initially recognizing it, at that point of time, the expectation was that it will be used for more than one period. Correct. So expectation on the date of initial recognition. Date of initial recognition. It means if you purchase any tangible item, for example, if I purchase a furniture, suppose, let us take, and our expectation that it will not be used for more than one period, then that is not property, plant and equipment, and that will be charged to profit and loss account as an expense in that period only. So that will not be a property, plant and equipment. Chalega? I think definition is very simple, nothing to explain much. But there are two clarification required from the point of definition. See, sir, there are many other purpose also. For example, if you are using some tangible item for accounting purpose, or for research and development purpose, or marketing purpose, quite possible. Correct now. Whether that will be property, plant and equipment? Yes, but it is not given. Yeah. So they have given admin, they have given one clarification. Admin purpose has been used here as a wider sense. And all other purpose which are for nothing but business purpose will be covered in this particular definition. So that clarification has been given, has been used as a wider sense to include all business purpose. Thus PP include asset used for selling and distribution, finance and accounting, and research and development, etc. Correct. Second clarification is for property which are given on rent to earn rental income. Abhi, we have not done investment property. When we'll do investment property, the investment property are those property which are held for earning rental income. One doubt will come, so that property which are held for rental income is covered under Ind AS 40. So any property which are given a rental to other, this is what. So a clarification has been given that any property which are held for rent, earning rental income is held for rental to others. So that is not covered in this chapter. That will be covered under Ind AS 40. So any property which are held to generate rental income will meet the definition of investment property. Is outside the scope of this chapter. But plant and equipment held for earning rental income. Any plant and equipment, suppose you have any plant, you have given a rent and you are earning rental income, that is covered in this chapter. Any equipment that is given rent for earning rental income, that is covered in this chapter. Chalega? Only exception is what? Property. The investment property are covered under Ind AS 40. That clarification has been given. More discussion will do in investment property chapter. Then one more clarification has been given about that spare part which I was discussing under Ind AS 2. And standby equipment and servicing equipment. What is spare part? Spare part, I think you know, small equipment which are used when we are doing any repair and maintenance. That will be used for replacing the small component, nut, bolt, loose parts, whatever. Servicing equipment means equipment which are used when you are doing repair and maintenance services. That is known as servicing equipment. Standby equipment means what? Any equipment which will be used when the principal equipment are not in use. The best example is suppose power plant which are used to generate electricity. But power plant may require maintenance for 15 days, so we will have some standby generator. So when power plant is not in use, we'll use what? Generator. Or if you see this classroom, this fan will be used when AC is not working. So fan is also what? Ceiling fan is what? One, we can say one type of standby equipment, but we Indian we use both. So for us though, we require both. Yes or no? Correct. So for us it is not a standby equipment, but in foreign country if you go now, you'll see that in that room there will be no ceiling fan. They use only AC. But suppose if there is a ceiling fan, so it means that is a standby equipment. Standby equipment. I've just given simple example. So can I say spare part? What doubt came? Because that might not be. It is quite possible in 1 year it is remain unused. One doubt will come, sir, whether it is a property, plant and equipment. So a simple clarification has been given. If it meet a definition of PP, then it is PP and apply Ind AS 16. But if it does not meet a definition of PP, then it is not PP, then it will become inventory and then apply Ind AS 2. Simple clarification given. If you see these two conditions, can you say first condition will be always satisfied for this all equipment? Whether it is spare part, standby equipment or servicing equipment. First condition will be satisfied. Only second condition may or may not be satisfied. And normally it is for spare part. Spare part may not be expected to be used for more than one accounting period. So normally for spare part, it can be for loose tools or servicing equipment also. There are many servicing equipment. The life may not be more than 1 year. So in that case, it will be treated as what? Inventory, and Ind AS 2 will be applicable and that will be valued at cost price NRV, whatever is given under Ind AS 2. Once they are consumed, once you have used it, then that will be charged to profit and loss account as an expense. As inventory we do. So here once you have used it, it will be charged to profit and loss account as an expense if it is classified as inventory. So if it meet the definition of PP, then recognize PP and apply Ind AS 16. When I am saying apply Ind AS 16 means apply depreciation also as per Ind AS 16. So on that item then depreciation will be also applicable. If it does not meet the definition of PP, then recognize it as inventory and apply Ind AS 2, then do not charge depreciation. Correct. Then such inventory will be charged to PL as an expense when consumed. Got this point? Clarification done. Important for MCQs. Super important now import for MCQs. Now it become important para. So they will give one case study. They will try to confuse you. You need to understand from that case study whether Ind AS 2 or Ind AS 16. But if you know, you can do it. So meaning has been done. Once definition criteria is completed, then after definition criteria, we need to understand recognition criteria as we have done under Ind AS 37. First, we have done the definition of provision, then recognition. then measurement. So in any Indias, there are in any Indias, first we do definition, then we do recognition criteria, then we do measurement, measurement initial and subsequent, then we do derecognition. Last may we do disclosure. Correct. There may be one more point in between this impairment also. But impairment for this is covered under India statistics, therefore I'm not writing, but impairment is also one point. You need to also understand about impairment of asset. Are you getting? So these are the points which every India has covered. Before that, there is one more point, scope. Scope normally I do at the end. Scope of that particular India. So definition, recognition, measurement, derecognition, then disclosure. So definition we have understood. Now coming to recognition. Means what India says that if it does not meet recognition criteria, it cannot be recognized as PP in the balance sheet. So they have given two conditions for recognition criteria. What are the two conditions? The cost of an item of PP. Cost of an item is what? Each item recognition criteria need to be applied separately. Each item. Correct? The cost of an item of PP shall be recognized as an asset if and only if two conditions are satisfied. What are that two conditions? First is probable future economic benefit. Second is measurement of cost. Means cost can be measured reliably. Very simple condition. It is probable that future economic benefit associated with the item will flow to the entity. Probable means what? Chances are more than 50%. Means there is a reasonable assurance that yes, it will give future economic benefit. Can I say for tangible item when you are acquiring or constructing, you will do whenever it will have future economic benefit. So for tangible item, normally first condition is deemed to be satisfied. Because it is probable that future economic benefit will flow. Therefore, you have purchased. Otherwise, why you will purchase? For tangible item, deemed to be satisfied. And cost, of course, cost can be identified easily. For tangible item, I think both the condition will be normally satisfied. Normally. But I will just give one situation. What happened with me? If second condition, okay. But first condition, when I started my recording for the first time, that time I purchased one camera. And when I initially started using it, I found that the camera is not suitable for my recording purpose. So I purchased it, and on the first day I found that that is not useful. So can the first condition is not satisfied, and therefore I can't recognize it as property, plant and equipment. Understood? I've just given one example. It is quite possible you purchase, then you find that it is of no use. Quite possible. In that case, it will not be your PP. In that case, it will not be your PP. Then what will happen? Then which Ind AS will be applicable? That we need to understand. But it is not PP, then Ind AS 16 is not applicable. Ind AS 16 is not applicable. One thing to you have understood, in that case, Ind AS 16 will not be applicable if it does not meet recognition criteria. Means, can I say in this way, in that case? If for any tangible item, first apply definition, then apply recognition criteria. Both satisfied. Recognize as PP. And I am writing tangible item other than what? Inventory. Other than inventory. Correct? If not satisfied, Either one or both. Either definition is not satisfied or recognition criteria is not satisfied. In that case, what will do? Hmm? If no future economic benefit, expense immediately. But if future economic benefit is expected from sale, understood? Can be sold, then classified as held for sale as per Ind AS 105. Coming soon. Coming soon. Understood? It's quite possible there may be some PP or tangible item not recognized as PP, then it will be PP classified as held for sale. So PP and PP classified as held for sale are two different terms. Okay. Have you understood what I'm saying? When I say PP, then which Ind AS? Ind AS 16. When I say PP classified as held for sale, Ind AS 105. Ind AS 105. Have you understood this? Held for sale. HFS write down. It is held for sale. Now correct? No, okay? चलेगा ना? Okay, sir. So recognition criteria also understood. Okay. Definition criteria, recognition criteria, no doubt. No, sir. Now coming to once recognition criteria satisfied, so it will be recognized. It will be recognized in our books of account. So we require measurement, initial and then subsequent. So first we'll do initial recognition. In that we'll do about initial measurement. Then we'll subsequent recognition. They will do about subsequent measurement. Chalega? Yes, sir. So first initial recognition. So it means we'll do measurement and initial recognition. So initial recognition PP always by using cost price. Initial recognition is done at cost price, not at fair value. Not at fair value. So at its cost. So what is the meaning of cost? Ind AS 16 say cost is nothing but cash price equivalent. So what do you mean by cash price equivalent? Which is equal to cash price. Means cash price means if you purchase at cash, how much you are going to pay. If you purchase in cash, how much you are going to pay, that become cash price equivalent. Means similar explanation I have given under inventory chapter. The cash price equivalent when the payment is not deferred beyond normal credit period, then cost price will be equal to cash and cash equivalent paid. Cash or cash equivalent paid means whatever payment done, that is what cost price. No present value then. So cost is the amount of cash and cash equivalent paid or the fair value of consideration given up. Fair value of consideration given up means it is quite possible you purchase in exchange of some other asset. So whatever you have given up, the fair value of that consideration given up will be added. Correct? Understood? I will explain this fair value of consideration given up again in some other point. But cash and cash equivalent you have understood. When the payment is deferred beyond normal credit period, then the cost price will be equal to purchase price at normal credit terms or present value of all future payment. Either of this will be given in the question. Either they may give purchase price at normal credit terms or they may give what? Discount rate, so we can find out what? If both are given case, if both will be always same. Both will be always same now. That both are not same, it means kahin na kahin question is wrong. They don't know anything. Yes, that is only fact. In that case, use your own judgment, apply whatever you want to do. I will say discount rate is given, then calculate what present value of all future payment. So that can be a point of discussion. In that situation, what need to be done? I will say question is not correct. Are you able to understand what I am saying? So cost price will be equal to present value of all future payment, that is purchase price at normal credit term. Once again, purchase price means what? Purchase price means what? Invoice price minus trade discount rebate plus non-refundable duties and taxes. याद रखो, याद रखो. अभी ताजा ताजा किया ना. What will happen after 6 months? Understood? अभी तो चलो you need to retain now. After 6 months you'll forget. For that revision required. So purchase price. Write down 1 second. Purchase price means what? Invoice price. If I am not writing, you write. Or you will not write. Right, Nare? Everything write down. Trade discount minus or plus taxes. Tax means which tax? Non-refundable duties and taxes. Simple. Can I say in this case also we need to calculate interest. Interest will be equal to future payment minus present value. And that interest will be recognized as an expense over the period of credit unless it is covered under Ind AS 23. Ind AS 23 means AS 16. So this PP can be a qualifying asset. If that is a qualifying asset, then covered under Ind AS 23, then can be capitalized. So in this case, they have said it can be capitalized, but in inventory chapter, Ind AS 2 says it will never be capitalized. These are two differences there. So don't be confused in the exam. Ind AS 2 will never be added. Here it may be added if it is a qualifying asset as per Ind AS 23. Okay, sir. The interest will be recognized as an expense over the period of credit unless covered under Ind AS 23. One simple example, I have taken an entity acquired a plant for rupees 20 lakh on 2 years. Interest free credit. Oh. An entity acquired a plant for rupees. Don't read answer. Till I say. Once you read answer now, then you will think at CA final level now you can understand any solution. Doubt will come in exam hall. Because that time we don't have solution. Either don't read solution, please. So 2-year interest free credit, an appropriate discount rate is 10%. Calculate a cost price of plant. My question to you all, in this case, will you calculate present value? Yes, they have given interest free credit. Means the cost price will be equal to 20 lakh or present value 20 lakh. Present value 20 lakh. Means this is bakwas. Bakwas na. This is contract. Contract can be anything. Contract may be anything now, but we need to do as per substance of a form. 2 years is more than normal credit period. So of course, it will always include some interest element. Even though it is given interest free, but it is not interest free. It is not interest free. So you need to find out cost price. That will be equal to 20 lakh into this. This you can calculate. First year interest will be added. Second year interest will be balancing figure. And the last amount will be 20 lakh. This though super easy, you have understood. But cost price will be what? 16 lakh 52,893. What will be first journal entry batao? On Y0? PP account debit to payable. Creditor is not correct term. Creditor is only for inventory. Okay. How much? 16 lakh 52,893 and 16 lakh or 20 lakh? 52,000. Then interest expense. If nothing is given, always charge to PL. If the question is silent, means question is silent about Ind AS 23. Nothing has been given. It is not a qualifying asset. If nothing is given, always charge to PL. If question is silent, charge it to PL. Means depreciation will be calculated on 20 lakh or 16 lakh? 16 lakh. 16 lakh na? Yes, sir. Can we proceed? This also you have understood. Now, elements of initial cost. There are 3 elements of initial cost. First is purchase price. What is the meaning of purchase price? Anything explanation required? Once again, any cash discount, settlement discount will never be deducted. Just write down one note. Cash discount, because one question is there. So a lot of doubt came in this chapter about cash discount. ठीक है ना? So it will never be reduced. Cash discount or settlement discount will not be deducted. It will be transferred to PL. Okay, sir. Simple. Yes, sir. Whenever question is silent about credit is available or not available, what you will assume? Question given GST, nothing is given. What will you assume? No. देखो देखो. If question is silent, these are all general assumption and you can't change general assumption. There are two type of assumption. One is general, one depends upon situation. But general assumption you can't change. As per assumption, your answer might be correct, but as per ICI, no. Fight जितना fight करना, you will not be given marks. Correct? देखो, if question is silent, assume input credit is not available. या assume non-refundable. देख लिया? If question is silent, assume credit is not available, or you can say taxes are non-refundable. Add it. Inventory also same, huh? Okay. Then what about directly attributable cost? Directly attributable cost. So directly attributable cost means that cost which are incurred to bring the asset in present location and condition for its intended use. So any cost incurred will be added, whether to bring the asset or to make it in working condition. But when I say directly attributable cost means what? Costs which are incurred only for the acquisition and construction. Means any cost which will be incurred even though the asset is not acquired, asset is not constructed, that are not directly attributable. Means any cost related to ongoing activities will not include. Ongoing expenditure. समझ जाओगे ना ongoing expenditure. Got this point? Examples, there can be many examples. For example, employee benefit. Employee benefit means salary. Employee benefit means salary expense. Salary expense which arises directly from construction or acquisition of PP. Correct now. Means suppose you are doing construction, so direct labor will be added. All the labor costs will be added. Correct. So any employee benefit expense means salary expense will be added. Transportation cost, installation expense, site preparation cost, professional technical fee. I think no doubt. Any doubt? Correct. The last point is what, which is very important also, cost of testing. Any testing cost will be added. Normally what happens, suppose you purchase some expensive item or high valued item, so normally you demand some trial period from the vendor. Correct now? Got this point? When I purchased the first time camera, I also demanded, but they have not given me because these are not so much expensive. Correct. So normally you demand some trial period. Suppose the cost price of that plant may be 100 crore. So you need to be satisfied fully whether it is as per your quality or not, whatever. So suppose 15 days trial period has been given. So during that 15 days, you'll use that equipment. Some cost will be incurred, that is testing cost. So all the testing costs will be capitalized if what? It is acquired. If not acquired, then the question of capitalization will not arise. So don't ask me that question. That will be charged to PL. Means testing cost will be added only when you have acquired it, na? Yes or not? Correct? Yes. So all the testing costs will be added, but can you see during the testing period, you will generate some production also. So suppose your testing cost was 1 lakh and you generated 10,000 units which can be sold in the market at rupees 10,000 only. Your testing cost was 1 lakh and how much you can recover? But can this is a say this 10,000 units whatever you have produced, that is inventory only, because that is your inventory only, na, that only you are producing, so that become inventory. The sale of inventory is revenue will transfer to PL. So one doubt will come, this 10,000 whatever is the sale proceed, that will be transferred to revenue or that is deducted from what testing cost and net amount will be capitalized. One doubt will come. So that clarification has been given. Why this is during testing period, so whatever sale proceed of that inventory will be deducted from testing cost and net amount will be capitalized. This clarification has been given. The cost of testing whether the asset is working properly after deducting proceed from sale of any product produced during the testing period, the net amount will be capitalized. Net amount will be capitalized. Understood? Doubt? Some doubt is coming. I was expecting from you, Chehra. From face to I can understand you are thinking something. This much experience I have. 1 lakh and suppose you generate what? 1 lakh 10,000. Actually, what happened? There was some amendment under India 16. Before that, it was silent. So what I used to say, as per my experience, as per my understanding, we should deduct only 1 lakh and 10,000 should be transferred to PL. That was my suggestion at that point of time, because that time also doubt was there. Then I used to say this type of question will not be asked in exam because India 16 is silent. In exam, controversy wala point they will never ask. The practical point. But now the clarification has been given. The clarification has been given and that becomes second carve out of your life. Actually, what happened? Amendment came where? Under IAS 16. Amendment kahan aaya? IAS 16. What IAS 16 says? As per IAS 16, deduction of proceed of item produced during the testing from the cost of an item of PP is not permitted. Deduction of proceed of item produced during testing from cost of an item of PP is not permitted. Means that is not permitted under IAS 16. But one clarification has been given under India 16. The excess of net sale proceed of item produced over the cost of testing, if any, shall not be recognized in PL but deducted from the cost of an item of PP. Understood? Means this will be entirely transferred to what? Will be deducted from the cost price of PP. Now the clarification has came. However, this point was common. They used to ask this point. 1 lakh and 10,000, this type of question they have asked. But till now they have not asked 1 lakh and 1 lakh 10,000. So that will be now, yes, deduct entire from the cost price of asset. Understood? So that clarification has been given. This become one new carve out of your life. Carve out you have understood? Chalega? I hope you have understood. So no discussion required. Any doubt about this? I think simple, because same thing you have done in AS10. So A you have understood, B you have understood. Coming to C. C is what? Interesting point. See what they have given. Initial estimated cost of dismantling and removing the item or restoring the site on which it has been located. Understood? Correct? Dismantling, removing and restoration. Means let us take one example. We purchase AC. So purchase price will be added. Then we have install it. Installation expense will be added. So AB you have understood. Now we are coming to C. Install and we started using it. Now to install, now it is ready for use. We can use it. Now what they are saying, it is AC will be dismantled at the end of useful life. We can estimate useful life for depreciation. Suppose the useful life is 5 years. So after 5 years, we'll dismantle it. Dismantling cost. We need to remove it. Removing cost. And can I say, The area where it is located means the wall, that also require restoration. That will be damaged while dismantling now. So that also require restoration of wall where it has been located. Understood? But these are all future expenditure or not? These all are future expenditure. So what they want to say, ki estimate it and capitalize it. Means you need to estimate it and capitalize it. My question to you all, whatever example I have given AC right now, same point you have done in AS10 also. Huh? My point to you all, the same example if I have taken dismantling cost, removing cost and restoration cost, whether it will be added or it will not be added. It will not be added. Why? Excellent, excellent, excellent. Means we need to combine this particular point with what? Ind AS 37. 37. We need to combine this point with Ind AS 37. So what Ind AS 16 says? This is not a full point. First, this liability means provision, will be known as decommissioning restoration similar liability. So we'll call it प्यार से what? DRSL. And this will be recognized as per Ind AS 37. As per Ind AS 37, future expenditure. The future expenditure Ind AS 37 is applicable whether we need to recognize provision or not. And that depends upon three conditions. Three conditions means there must be present obligation arising from past event. Outflow of resources is probable and reliable estimation can be made. If these three conditions satisfied, then provision need to be recognized as per Ind AS 37. This is Ind AS 37 already we have done. Now what Ind AS 16 says that if obligation of DRSL, if obligation of DRSL has been incurred when the item of PP was acquired or during its useful life, at any point of time when you are using the asset, at any point of time, that obligation may be incurred initially or subsequently also. Initially or subsequently also. Got this point? So if that obligation of DRSL has been incurred, then entire amount will be capitalized to the cost price of PP. Entire amount. Which amount? Which amount? Provisional amount. Provision means as per Ind AS 37, that will be present value of future expenditure. Present value of future expenditure. The provision you are calculating as per Ind AS 37, Ind AS 16 only saying that amount will be capitalized. That amount will be capitalized. So it will be capitalized to the cost price of PP. Amount will be estimated as per Ind AS 37. Understood? It means, can I say in case of AC, whatever example I have given, there was no obligation. When I say obligation, this obligation can be legal obligation or it can be legal or constructive. Now you know what is constructive. It can be legal obligation or constructive obligation. Then it will be capitalized. It means if there is no obligation, if the obligation has not been incurred at a time when the PP was acquired or during any point of time during its useful life, then it will not be capitalized. Then it will not be capitalized. Means in case of AC, so we have never capitalized because I don't have any obligation. Correct. Then it will be treated as cost of disposal. Then in that case, dismantling cost will be incurred actually at a time of disposal. Then it will become cost of disposal and will be treated as per cost of disposal when we learn derecognition principle. Okay? So treated as cost of disposal on derecognition of asset. This point once again I'll come when I will do the derecognition of the asset. Have you understood? Correct? Correct. A simple example, if I say in this way, suppose you are doing metro construction or any, suppose you are building some, suppose you are constructing any building. For that you have destroyed some area, correct now, and there is a legal obligation that you need to restore that site once the construction has been completed. You have taken permission from the authorized department and there is a legal contract, a legal obligation or constructive obligation, whatever, that you need to restore that particular site. So that restoration cost will be capitalized. The restoration cost will be capitalized. Or one more example if I give, suppose I have taken one building on premises. I have taken one building on rent. Ind AS 116 will be applicable. Lease. Rent means lease na. So Ind AS 116 will be applicable. Right now I'm not teaching Ind AS 116. Now, correct na. Suppose this is the building. Now what was the agreement that I need to return the building as it was originally given. But can I say to take my classes I'll do some alteration. I have done alteration means I have constructed artificial wall. This is class 1, class 2, class 3 admin office. Some more alteration I have done. So can I say as per contract there is a legal obligation to dismantle it at the end of lease term, and therefore it will be capitalized to the cost price of ROU asset. ROU asset understood? Because operating lease, there is no concept of operating lease. So as per Ind AS 116, this building will become my ROU asset. In that I need to capitalize. I need to capitalize. Once again I will discuss the same example when I will take Ind AS 116. Ind AS 116. But I hope you have understood what I am saying. If there is no such contract, because this all alteration I have done, but there is, believe me, there is no contractual obligation. In the contract nothing is mentioned. I will leave it because what I will do? Why to dismantle? Because after dismantling this will not of my use now. So I will not dismantle. I'll just leave it and go. So can I say for me there is no contractual obligation. There is no contractual obligation. Therefore, if suppose Ind AS 16 is applicable for me, so I will not recognize any provision and I will not capitalize it. It means you need to see the agreement for legal obligation or for constructive obligation, the policy of the management. Policy of the management. Very important point from examination point of view. Now in examination point of view, suppose they have given dismantling cost and nothing is given about obligation, what will assume? So always assume this case. If question is silent, always assume yes. However, at CA final level, they will give yes, there is a legal obligation or constructive obligation. But suppose question is silent, assume yes, there is a legal obligation or constructive obligation. Chalega? Don't assume second part. Don't assume second part. Okay. There is one exception given. What is the exception? Let us read it. The interesting part. Entity applies Ind AS 2. Ind AS 2. Ind AS 2, to the cost of obligation for dismantling, removing and restoring the site on which an item is located that are incurred, means this cost are incurred during a period as a consequences of having used the item to produce inventory during that period. Oh my god, what do you have understood? Have you understood English? It's a paro pyar se English, it is English. Ind AS 2 applies to the cost of obligation for dismantling, removing and restoring the site on which the item has been located that are incurred. This cost are incurred during a particular period as a consequences of having used the item to produce the inventory during that period. Sometime what happened? Suppose we have received some contract to produce some specific item. Correct now? A contract we received. And we need to produce something for a 2 year or 3 year long term contract. So whatever we are producing, that is my inventory. Correct now? And for that, you have incurred an obligation to dismantle whatever you have constructed. Correct now? Are you getting what I am saying? Suppose you receive an order to construct some item. For that, you have taken a premises for the 2 years. For there, you have done some modification, etc. And you know that once the inventory is produced, you will dismantle it. Once the inventory is produced, the contract is over. Now you don't require this premises. You leave it now because you have taken this for lease term for 2 years only. You are not going to produce any other item. Are you getting what I am saying? It is 100% possible example. So can I say in this case, whatever the obligation you have incurred
to dismantle, etc. That is nothing but for what? Production only, directly attributable. So in that case, this entire cost of obligation for dismantling, removing, etc. will become the cost price of inventory. Add to the cost price of inventory. Then it will not be added to PP, that will be allocated to all the unit produced. Suppose you are producing only one unit, suppose big aeroplane you are manufacturing, correct now? So that will be entirely added to the cost price of that particular inventory. Understood? Once again read, now you'll be able to understand. Important, why? Because one similar case study recently they have added, recently means 2, 3, 4 attempts before they have added, but till now not asked in exam, but can be asked in what? MCQs. Scope is not there in descriptive question, but scope is in case study. Chalega? Entity applies Ind AS 2 to the cost of obligation for dismantling, removing and restoring the site on which item is located that are incurred during a particular period as a consequences of having used the item to produce the inventory during that period. Understood? But can I say automatically once the case that is given, so they will inform you this point. So automatically you will be able to understand, yes, this is a point of Ind AS to add to the cost price of inventory. Correct? They will write down important, because if you will not write down important, you will not write before exam. Chalega? Example. On 1/4/2017, a PP was acquired for rupees 50 lakh subject to a trade discount of 10% and GST 18%. Credit of GST is not available. Other directly attributable costs are rupees 5 lakh. Useful life of PP is 5 years as an applicable law. Law means legal obligation. PP need to be dismantled at the end of useful life. Estimated cost of dismantling is 6 lakh. Appropriate discount rate is 10%. Calculate cost price. Super easy question. This type of question will not be asked. Correct. So what is the invoice price? 50 lakh minus trade discount 5 lakh, 45 lakh, add GST because it is non-refundable. The GST 18% will be calculated on 45 lakh now. It becomes 53 lakh 10,000. Then we need to add directly attributable cost, that is 5 lakh, and we need to also find out present value of 6 lakh. So it was going to be incurred after how many years? 5 years. So 10% discounting factor, 10%, 6 lakh. How much? So 6 lakh into 0.620 na. 0.620, this amount will come, you can add this amount and this will become the cost price of PP. For journal entry you will do, only for your understanding, PP account debit how much? 61 lakh 82,540. To provision how much? 3 lakh 72,540. And balance will be cash or bank? Cash or bank, balance amount will come. Now Ind AS 16 will be applicable to which amount? Ind AS 16. So to this will apply Ind AS 16. Means depreciation will be calculated on 61 lakh 82,540. Correct. And can this provision Ind AS 37 will be applicable? To provision Ind AS 37 will be applicable. Already we have done Ind AS 37. Correct. Means can we do unwinding of provisional amount? Every year we'll add what? Interest. That interest will be capitalized or charged to PL? Where this is interest on borrowing. I was expecting someone will say capitalized. Think Ind AS 37, not Ind AS 23. This is Ind AS 37. Ind AS 37 is unwinding of provisional amount. We need to make present value what? Equal to future value. So every year we'll add what? Interest. Interest will be capitalized or charged to PL. So write down somewhere. We need to calculate interest now. Interest on provisional amount, and that will be transferred to what? PL. Interest you can calculate now. Calculation you can do, but don't capitalize it, Baba. Similar question was asked in last exam. I have that question. I will show you. They say past journal entry for 4 year or 5 year, I think. I don't remember. So depreciation and interest cost. I don't think so any student have done mistake, but you don't know you can do mistake. Very simple question was there. Understood? The only one point, one doubt may come is that this provision amount may change Because our India 37 says it need to review at the end of each year. The future expenditure estimation may change. So if estimation change, then what will be the accounting treatment? For that, India 37 is silent. India 16 is silent, and therefore what will be added? Appendix to India's 16. So there is one last point of this chapter, appendix. So that appendix will do at then. I will not explain right now. So if that is a doubt coming in your mind, say if provisional amount change, then what will we do? That will be given under appendix. So that will be discussed. Nothing to worry. Correct now. So any changes in the amount of provision will be discussed at the end of the chapter. At the end of the chapter. But I hope you have understood up to this all the points. Okay. Chalo. Today this much only. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Miss, you are asking at 9:30, so I'll try to close the class at 9:30. Okay, try. But if suppose some concept is going on, then I will तब तो 9:50 9:10 भी हो सकता है, because I will not wind up in between. ठीक है ना? That will affect my next class. एक दो दिन चलता है, but I'll try my level best. ठीक है? 9:30 I'll try my level best. जल्दी आ सकते हो क्या? मैं नहीं आ सकता. ठीक है? क्योंकि मेरे को चाय चाहिए होता सुबह सुबह. उसकी वो